I mean, the honest answer is 26 years. I don't know that I've seen the number of home sale contingent contracts coming in that I'm seeing right now. Hey there, everyone. Dave Barlow here with the gang from Sell for 1%. Actually, we're missing one in action. He's out showing properties or he's homing to bed. So we'll give him the benefit of the doubt. And he's out showing properties with a hot prospect. So how about that? It is October 8th, Wednesday. I'm not aware of any great significant things being dropped this week, Rich, that the market is anticipating. Maybe I heard that Jerome Powell was speaking somewhere and some of the other governors, but other than that, I don't know there's anything of importance that might impact the market.
Well, it's October 8th, and I'm looking outside, and the leaves are falling, but rates are not falling. So we're stuck in a pattern of that low sixes, Dave. That's just kind of where we are. The only numbers I think that matter are 5 and 7. I think 5 in front of the interest rate, and we do have some FHA rates and first-time home buyer rates that can get a 5 right now. But if the general, average priced home with average credit gets into the 5s, I think to start to see a lot of action in the market. And we're very close, but we just can't get there. And if we ever get to 7 again, I think that would slow things down. I think that would spook people a little bit. But right now we're in that 6 1/8, 6 1/4 range on most loans. And again, some first-time home buyer, lower loan amount type profiles will get a 5.875 30-year fixed. So if you're seeing that, if the folks are seeing a 5 in front of it, yeah, it does exist, but not for the great masses of people who are looking to buy a house. The person who's getting a 500,000 house with a 400,000 mortgage, that rate's typically going to be 6 1/4, 6 1/8, something like that right now.
Well, that's not too terribly bad. I mean, it's a lot better than it was 4 or 5
It's
months ago.
significantly down. If we remember,
Yeah.
it wasn't that long ago. We were talking about racing the 7s, and a year or so ago, it was even into the 8s. So, I mean, we are down, and we have to realize that it's not 2s, and we're never going to have 2s again. I don't think, not
Well,
in
don't
your or
ever
my
say
lifetime. Yeah,
don't ever say
Dave.
that.
Yeah, that's true. Probably Jason may see it, but you and I, we may be looking down on the 2% rate, and that happens. I don't know.
Well,
But
I hope
think
not. It means the economy's doing pretty poor.
I think
yeah,
I think I told you my buddy says, "Hey, we're in the fourth quarter, so we got to make the best of it." And I was like, "Yeah, I think
right.
I'm still mid third quarter." So,
I'm headed into overtime
oh
myself.
boy, no, you're not. You're drinking your protein shake there. You're going to live
There I am.
forever. So rates are back about what they were before Jerome Powell had his rate reduction a week and a half, 2 weeks ago.
Yeah, the rate reduction actually had forced the rates up a
Yeah.
little bit. They were getting closer to high 5s, and now they're closer to low 6s, and they're kind of just stuck there. And the government shut down. Last Friday, we were supposed to have an unemployment report that would have maybe helped us, maybe
Right.
not. And we did not get that because of the government shutdown. I think a lot of the other reports that normally come out, CPI, PPI, I don't know whether any of that stuff comes out until we get the government opened again.
We'll get the ADP unemployment number, won't we?
We did get that last week.
Yeah.
And that was the only indicator. And it actually was a negative number. I don't remember now what it was, but I think like minus 25,000. It wasn't a healthy number.
So it's pretty
which
much,
is normally good for interest rates.
yeah. And like you say, we'll have to wait until the government
Yeah.
reopens so we can get all the fun news that they provide. And then a month or two down the road, or even a year down the road, they'll
Yeah.
revise it.
Yeah. It's kind of funny if you go to the HUD website. Let me see if I can find this email. If you go to the HUD website, it says something. There's a big, it's closed, and there's a big sign on it that says the leftist Democrats have shut down the government.
Oh boy.
And we're going to do our best to serve you as however we can or something like that.
Oh man.
So
All
that's where
right.
we are right now.
Jada Bomb on the listing side. What are you seeing out there with your listings? I think we have somewhere in the neighborhood of about 70 active listings. And so what are you seeing with your listings? How are things going?
Overall in the market, it still remains a pretty good time to be a home seller in Columbus. Prices are up around 4%, 3.5%. We're still climbing. I tell every seller when I meet them, it's not 2021, it's not 2020 when rates were 3%. Homes are selling in the first hour when that was the best time ever to be a realtor. Today, the median for Columbus this week is up to about 49 in the metro. Different areas, hot pockets, so you'll see it skewed back down to 30, 28, 35. But in general, some of my listings, I had one in the Hilltop, it went in the first day. Some of these still do go quick, but for the most part, it's taken a few weeks to find the right buyer. Now, it's all price dependent. The number of listings in the metro, we're still above 5,600. So we're at a 10-year high for homes for sale. And like this is the showing time chart, and the orange line is this year, and this is showing, where demand is based on showings in Ohio. The orange line is higher than the last 4 years, and so buyer demand is strong. There are more buyers in the market right now than there have been the last couple years. The big difference is it's spread across 5,600 listings. Back during COVID, we had 1,200 for sale, 1,000 for sale. So every single thing you put on the market, it was moss to a flame, and buyers would come, make their offer, and you would have these crazy bidding wars. Today, buyers have more selection. They can be picky. So I'm getting a lot of home sale contingent offers. I got to bat those down. It's like, hey, please get your house sold first.
Right.
I got one that came through the old double whammy, as you would say, Dad, that they
Home sale
lowballed us.
contingency for 50,000 less than your asking price.
Yeah, a little like 75,000 less than asking price,
Oh.
contingent on a home sale, and the home is not yet on the market.
Oh boy,
And
that's a
it's
triple whammy.
it's like, appreciate the offer, but why don't you get your home in contract and then come back and talk to us? You very politely decline those. I mean, we had one of those about a month ago on one of my listings where it was an extreme low ball. Home was not yet for sale, continued on the home sale. We very politely declined it. And then yesterday, they came back with almost a full price offer, and their home is sold. Money's in the bank. We're closing in a week. And so, they're much rather do that than take my chances. Selling market really not bad. And buyer demand is there. You got to be priced right. My homes that need repairs, those ones are very tough to sell right now. I have sellers who can't figure out or understand why somebody won't lowball them, won't make an offer. And so the ones that need, repairs, those are pretty tough right now to get sold.
Right. Yeah, it's interesting that you mentioned a home sale contingency because I'm seeing more of those as well. And it's been I mean, the honest answer is 26 years. I don't know that I've seen the number of home sale contingent contracts coming in that I'm seeing right now. It's kind of weird, I guess, because homeowners are saying, well, I don't want to be homeless. And so I want to get my home, sold before I'm able to purchase. But I mean, even prior to the craziness that we saw in 2000, I don't remember seeing this many home sale contingency offers come in. Have you?
I was not around in 2001,
No, I'm
but
talking
Then you
20,
were around, you just weren't
22.
selling real estate.
No, I'm talking about 2021, 2022. I mean, prior to that, where, that was the red hot market back in 2015, 16, 17, 18, we had somewhat of a normal market that was growing coming out of the foreclosure crisis bottom at 2012. I just don't remember seeing this many home sale contingent contracts.
I think from a lending side, what I have noticed is that people can't qualify.
Right.
As soon as we hang up, I've got to call her and say, look, you're going to have to sell your house first. She wants to buy non-contingent, but the payment on a 6% rate plus keeping the old rate, and if they need a bridge loan, and then if they have a car payment, which the average car payment these days is $500 or $600, and it's not unprecedented to see a car payment over $1,000. So you start trying to pack all that debt in and qualify under the salary requirements that you have, and you can't make it all fit. And so you do got to do a contingency. That's part of the issue, I think, right now.
Yeah, like I said, I'm seeing more than I can remember seeing in previous markets. And so I think it's obviously for us, if we're seeing that, because the number of, deals that we're able to do, we need to try to figure out a way of how we can use that to get a home sold.
Yeah, and I try and tell my sellers, take the opposite tact. I mean, just try and get yours on the market. There's different tiers of home sale contingent offers, and the
Sure.
highest one being my home's in contract, set to close next week,
Right.
versus my home's not yet on the market. I'll have it on in 7 days.
Right.
And especially when I have my listings, it's a weird dynamic because you don't know how many selling agents have the experience where it's like, yeah, homes are not selling as quick as what you're used to. And so why would I take my listing off the market? If I got this median days on market of 30, 40 days, why would I take it off the market for 20 days and wait for you to sell your house when I'm playing this numbers game of trying to drive showings through? So to me, it doesn't make sense to take my listings off. For my clients, you try and sell your house contingent on finding suitable housing. That way you're not stuck homeless and you can go find something. It's easier to buy right now, I think, than it is to sell.
It is.
It's kind of flipped around from what it was in 2021. And, Rich, I think that's interesting talking about how people can't afford it right now. I think the other thing too is that most of the sellers that I talk to, they kind of know that, hey, things are not selling as quick as what they were. I think some people are freaked out about the economy, the government shutdown. And so I don't know that they want to take a bridge loan or own two houses. Even if they could qualify, I think that most people rather have their sell first or be contingent on selling, so I'm not stuck with two houses.
They're a little more nervous, and they've heard the stories. A few years ago, they were hearing the stories, your house will sell in one day. Now they're hearing the stories, or they're seeing their neighbors and the houses are sitting for 30 or 40 days, and it makes them a little more nervous, I believe, in addition to the numbers not working.
Yeah, and I with you, Dad, I didn't see this many home sale contingencies back in 2021. I also wonder how much of that is because average prices have gone up so much. Like first time buyers are kind of boxed out a little bit. When the average price is now 400,000 at a 6% interest rate, it's way different than being 300,000 at a 3% interest rate. A lot more people could have afforded to buy a couple years back than today. So I think there's a lot of different factors at play. But I will tell you that a couple years ago, when you sent me a home sale contingent offer, no problem. We would sign that all day long because we know your home's going to sell in a week. But today, it's like I'm not so sure. If you're overpriced, you may not sell.
Right.
Yeah.
The key, I think that's the key, is that the person offering the home sale contingency, if their home is competitively priced to what the market really is, then that's one thing. But if they're even 5, 10, 15,000 overpriced because of the amount of inventory that we have, and it's not that much, 5,600 houses is not like it was in 2012 when we had 18,000 houses on the market, but it still gives buyers more options. And I think the key is, what's your house worth? And if you're doing a home sale contingency, don't write an offer for 100,000 less than the asking price. And your house is going to have to be competitively priced in order to get that deal through.
Yeah, but I don't know if you've seen this same trend or not, Dab, but I've seen probably more sellers than I've ever seen going back to like 08, 9, 10. I mean, like going back that far, that are losing money. And it's not everybody, because if you bought your house in 1989, yeah, you're sitting on $500,000 of equity. But for the people that bought their home in the last 2 or 3 years, I've had a lot of them all of a sudden bringing money to closing or losing money and can't afford to sell. Or, I've had a couple here behind on payments that were going to try and work a short sale, or I've not seen that in a long time.
Yeah. Fortunately, if you bought in 2020 or 2021, then you got the benefit of the 20% appreciations that happened in 2022, 2023. And so you do have some value in the home, even if you overpaid. But if you bought in 2023, 2022, you may not be.
It's an interesting market.
All right, guys, I appreciate your time. If you like the information, the discussions here, we'd appreciate if you would like and subscribe. Tell your friends about us here at Sell for 1%. The biggest question we always get is, how can you guys do that? Just give us a call. We'd be happy to give you the quick elevator pitch to let you know what we do, how we do it. And of course, our good friend Rich Sircone at Equitable Finance. Been doing this a long time. Got a lot of different products that can help you out and help you achieve your goal, which is to get that new home for your current circumstance, whether you're downsizing or if you got a little one on the way and you need an extra bedroom, something like that, or job transfer. We'd love to be able to help you. Give us a call here at Sell for 1%. And of course, as I said, Rich over at Equitable Finance. Again, thanks, guys. We appreciate your time, and we'll talk to you next week.
Thank you, guys.
And hopefully HUD's able to get that sign down, Rich.
Yeah, let's hope we can get an agreement in Washington by the end of the week and get the sign down and up and running again.
There you go. All right, guys. Have a great day.
See you later.